Question 1. Which of the following scenarios would most likely require an endorsement to a standard title insurance policy? A. The property has no known easements and is located in a residential area. B. The property includes mineral rights, and the owner plans to lease these rights to a third party. C. The title examiner found no issues during the title search and the transaction is proceeding smoothly. D. The seller has lived on the property for 20 years with no title disputes. Answer B. Explanation. Endorsements are used to modify the coverage of a title insurance policy to address specific risks or scenarios. In this case, leasing mineral rights to a third party introduces potential complexities that are not typically covered by a standard policy, necessitating an endorsement. Option A refers to a straightforward residential property without additional risks. Option C suggests there are no risks or complexities, and option D implies long-term ownership with no known issues, neither of which would likely require an endorsement. The American Land Title Association (ALTA) offers specific endorsements to address risks like mineral rights and air rights, which are beyond the scope of basic title policies. These endorsements provide protection against future claims that might arise from these rights. Question 2 scenario. Mr. Patel is purchasing a piece of agricultural land that has been in the same family for generations. During the title search, the examiner discovers that there is an unrecorded deed from a prior transaction involving the property. What is the most appropriate action for Mr. Patel to take before proceeding with the closing? A. Proceed with the closing as the unrecorded deed is irrelevant after so many years. B. Request the seller to provide a quiet title action to resolve the issue. C. Obtain an extended coverage title insurance policy to cover the unrecorded deed. D. Ignore the issue as it's unlikely to cause problems for Mr. Patel in the future. Answer B. Explanation. The discovery of an unrecorded deed is a significant title defect that could affect the property's ownership. A quiet title action is a legal proceeding used to resolve ownership disputes and clarify the title, making it the most appropriate course of action. Option C might provide additional coverage, but it doesn't address the root of the issue, which is the unrecorded deed. Option A dismisses the problem without resolution, and option D is risky since unrecorded deeds can lead to future claims of ownership. In real estate law, defects such as unrecorded deeds must be addressed before transferring clear title. Ignoring this issue could result in Mr. Patel facing claims from heirs or other parties who believe they have a legitimate interest in the property. Question 3. What is the primary purpose of a title commitment in a real estate transaction? A. It guarantees the buyer clear title to the property upon closing. B. It lists all the current and potential title defects found during the title search. C. It outlines the conditions under which a title insurance policy will be issued. D. It acts as the final title insurance policy that protects the buyer. Answer C. Explanation. A title commitment outlines the terms and conditions under which the title insurance policy will be issued. It includes essential information such as the legal description of the property, the parties involved, and any exceptions or exclusions from coverage. It is not the final policy, but a preliminary step indicating what needs to be done to issue the policy. Option A is incorrect because the commitment itself does not guarantee clear title. It specifies what must be resolved to ensure clear title. Option B refers to some elements of a title search but does not fully describe the purpose of a title commitment. Option D confuses the commitment with the final policy. The Real Estate Settlement Procedures Act (RESPAT) and related regulations govern the use of title commitments, ensuring that all necessary disclosures are made prior to closing. The commitment serves as an essential document for both the buyer and lender to understand the state of the title before finalizing the transaction. Question 4. Which of the following statements about adverse possession is most accurate? A. Adverse possession allows a person to claim ownership of property if they have continuously used it for a period of 5 years or more. B. Adverse possession can only be claimed if the property owner consents to the use of the property. C. Adverse possession requires open, notorious, and continuous use of the property without permission from the legal owner. D. Adverse possession applies only to residential property and cannot be used for commercial or agricultural land. Answer C. Explanation. Adverse possession is a legal doctrine that allows someone to claim ownership of property if they openly, notoriously, and continuously use the property without the permission of the legal owner for a specified period as determined by state law. Option A is incorrect because the time period for adverse possession varies by state and is often longer than 5 years. Option B is incorrect because adverse possession requires use without the owner's consent. Option D is incorrect because adverse possession can apply to various types of property, including commercial and agricultural land. In Hawaii, the statutory period for adverse possession is typically 20 years. The elements of adverse possession include continuous, open, hostile, and exclusive use of the property. The purpose of this doctrine is to encourage the productive use of land. Question 5. In a title insurance policy, which of the following risks is typically excluded from coverage unless specifically endorsed? A. Boundary disputes due to an error in a recorded deed. B. Forgery or fraud in past property transfers. C. Zoning law violations or restrictions. D. Claims arising from undisclosed heirs. Answer: C. Explanation. Zoning law violations or restrictions are typically excluded from standard title insurance coverage unless specifically endorsed. Standard policies cover issues such as boundary disputes, forgery, and undisclosed heirs, as these are directly related to defects in the chain of title. However, zoning matters are outside the scope of title insurance as they pertain to how the land can be used rather than ownership of the title. In title insurance, exclusions from coverage are listed in Schedule B of the policy. These exclusions often involve zoning, building codes, and other governmental regulations, which must be addressed separately by the property owner. Question 6. Scenario. MS. Wong is purchasing a condominium in Hawaii. During the title search, the examiner identifies a mechanics lien filed by a contractor who claims unpaid work from the previous owner. What should MS. Wong do to ensure she receives clear title at closing? A. Ask the previous owner to provide a release of lien before closing. B. Proceed with the closing and rely on the title insurance to resolve any future issues. C. Obtain an extended coverage title policy to cover mechanics liens. D. Request that the lender handle the lien as part of the mortgage process. Answer: A. Explanation. A mechanics lien is a claim made by contractors or suppliers who have not been paid for work performed on the property. MS. One should request that the previous owner provides a release of lien before closing to ensure that the lien is removed and does not affect her title. Option B is incorrect because relying on title insurance without resolving the lien can complicate ownership. Option C may provide additional protection, but it is not a substitute for resolving the lien. Option D is incorrect because the lender may not take responsibility for the lien. Mechanics liens are involuntary liens and are typically resolved before closing. If left unresolved, they can result in foreclosure or forced sale of the property. Question 7. When conducting a title search, which of the following would most likely represent a cloud on title? A. A mortgage that was fully paid off but remains recorded as a lien on the property. B. An unrecorded easement benefiting a neighboring property. C. A deed recorded in the chain of title that contains the correct legal description. D. A property boundary dispute that was resolved by a court 10 years ago. Answer: A. Explanation. A cloud on title refers to any claim, encumbrance, or condition that might cast doubt on the validity of the property's title. A fully paid off mortgage that remains recorded as a lien would create such a cloud, as it suggests a potential claim against the property. Option B refers to an unrecorded easement, which would not necessarily create a cloud unless it is contested. Option C involves a deed that is correctly recorded, so it does not create a cloud. Option D refers to a resolved dispute which no longer affects the title. Clouds on title can be resolved through actions such as releases, corrective deeds, or quiet title actions to ensure the title is clear before transferring ownership. Question 8. Which of the following is typically required in the title commitment before a lender will approve the closing of a property transaction? A. The presence of a quitclaim deed from the seller. B. Evidence that all property taxes have been paid. C. A title insurance policy that includes protection against zoning violations. D. A full survey of the property boundaries, even for a condominium unit. Answer: B. Explanation. Before closing, lenders typically require evidence that all property taxes have been paid to avoid any tax liens on the property. Option A is incorrect because a quitclaim deed, while transferring interest, does not guarantee clear title. Option C is incorrect because title insurance typically excludes zoning violations unless endorsed. Option D is incorrect because a full survey is not always required for condominium units where boundaries are often defined by the condominium declaration and not the land itself. Taxes are a common reason for involuntary liens, and ensuring that taxes are paid is critical for maintaining clear title at closing. Question 9. Which of the following would be considered a voluntary lien? A. A tax lien placed on the property for unpaid property taxes. B. A mechanics lien filed by a contractor who was not paid for services. C. A mortgage taken out by the property owner to finance the purchase of the property. D. A judgment lien placed by the court after a lawsuit. Answer C. Explanation. A mortgage is a voluntary lien because the property owner willingly grants the lender lien on the property in exchange for financing. Option A refers to a tax lien, which is an involuntary lien resulting from unpaid taxes. Option B refers to a mechanics lien, which is also involuntary, placed by contractors. Option D refers to a judgment lien, which is involuntary and results from legal action. Voluntary liens are created with the consent of the property owner, typically to secure debt, whereas involuntary liens arise from obligations like taxes or court judgments. Question 10. In which scenario would an extended coverage title insurance policy provide additional protection beyond a standard policy? A. The seller of the property has lived there for 30 years without any disputes. B. A neighbor claims an easement over a portion of the property that is not recorded. C. The property is located in a flood zone and is subject to government regulations. D. The property's legal description matches the recorded plat exactly. Answer B. Explanation. An extended coverage title insurance policy provides additional protection for risks that are not covered by standard policies, such as unrecorded easements or boundary disputes. Option A refers to long-term ownership, which does not necessarily require extended coverage. Option C involves government regulations, typically excluded from title insurance policies. Option D refers to a correct legal description, which is already covered by standard title insurance. Extended coverage often includes protection against unrecorded easements, mechanics liens, and encroachments, offering broader protection than standard policies. Question 11. What is a quitclaim deed primarily used for? A. To transfer clear marketable title to a property. B. To resolve disputes or transfer property between family members without warranties. C. To guarantee that the title is free of any defects or encumbrances. D. To create a lien on the property for unpaid debts. Answer B. Explanation. A quitclaim deed is often used to transfer property between family members or to resolve disputes. It provides no warranties or guarantees about the status of the title, only conveying whatever interest the grantor may have in the property. Option A is incorrect because quitclaim deeds do not guarantee clear title. Option C is incorrect because they offer no warranties, and D is incorrect because they are not used to create liens. Quitclaim deeds are often used for informal property transfers, such as adding a spouse to title or resolving property disputes without litigation. Question 12. Which of the following is a feature of a joint tenancy with the right of survivorship? A. Tenants can will their share of the property to their heirs upon death. B. Upon death, a tenant's share automatically transfers to the surviving tenants. C. Tenants hold unequal shares of the property based on individual contributions. D. The joint tenancy is automatically dissolved if one tenant sells their share. Answer B. Explanation. A key feature of joint tenancy with the right of survivorship is that upon the death of one tenant, their share automatically transfers to the surviving tenants, not to their heirs. Option A is incorrect because tenants cannot will their share. Option C is incorrect because shares are equal in joint tenancy. Option D is incorrect because the sale of one share typically converts the joint tenancy into a tenancy in common but does not dissolve it entirely. This form of ownership is common in family arrangements or among spouses, as it allows for the transfer of ownership without probate. Question 13. Scenario. Mr. Silva owns property as tenants in common with his business partner. They are unsure how to divide the property if they dissolve their partnership. Which of the following legal actions would most likely resolve their disagreement? A. Quiet title action. B. Foreclosure. C. Partition action. D. Adverse possession claim. Answer C. Explanation. A partition action is a legal process used to divide property held by co-owners, such as tenants in common, when they cannot agree on how to divide it. Option A refers to resolving title disputes, not co-ownership. Option B applies to lender foreclosure, not property division. Option D refers to gaining ownership through reverse possession, which does not apply here. Partition actions can result in the property being physically divided or sold, with proceeds divided among co-owners. Question 14. Which of the following best describes an easement or pertenant? A. An easement that benefits a neighboring parcel of land and passes with the land when sold. B. An easement granted for a limited period of time for a specific purpose. C. An easement granted to a utility company for public services. D. An easement that allows access across a parcel of land to a public road. Answer A. Explanation. An easement appurtenant benefits a neighboring parcel of land and is attached to the land, passing with the title when the property is sold. Option B refers to a temporary easement and C refers to an easement in gross, typically granted to utility companies. Option D refers to a right-of-way, which is a specific type of easement but not necessarily appurtenant. Easement appurtenant creates a dominant and servient estate where one property benefits dominant and the other provides the easement servient. Question 15. What is the primary function of escrow in a real estate transaction? A. To ensure that all closing documents are filed with the local government. B. To provide a neutral third party to hold funds and documents until the transaction is complete. C. To verify the legal description of the property and the deed. D. To assist the buyer in obtaining financing for the purchase. Answer B. Explanation. Escrow provides a neutral third party who holds the funds and documents until all terms of the real estate transaction are met. Option A is incorrect because filing documents is part of the closing process but not escrow's primary role. Option C involves title examination, not escrow. Option D is incorrect because escrow does not assist with financing, and that's the lender's role. Escrow ensures that both parties meet their obligations before the transaction is finalized, providing security for both buyer and seller. Question 16. Which of the following is an example of a deed restriction? A. A zoning ordinance that limits the height of buildings in a neighborhood. B. A covenant that prohibits the use of the property for commercial purposes. C. An easement that allows a neighbor to use the driveway. D. A mortgage lien placed on the property by the lender. Answer B. Explanation. A deed restriction, also known as a restrictive covenant, is a limitation placed on the use of the property by the deed, such as prohibiting commercial use. Option A refers to a government zoning ordinance, not a deed restriction. Option C refers to an easement, which is not a deed restriction. Option D refers to a lien, not a restriction on use. Deed restrictions are commonly imposed by developers or homeowners associations to maintain certain standards within a neighborhood. Question 17. Which of the following could terminate an easement? A. The dominant estate sells the property to a new owner. B. The easement is used for a different purpose than originally intended. C. The servient estate is foreclosed upon and sold at auction. D. The servient estate grants the dominant estate a release of the easement. Answer D. Explanation. An easement can be terminated if the servient estate, the property burdened by the easement, grants a release to the dominant estate, the property benefiting from the easement. Option A is incorrect because the easement usually passes with the land. Option B may lead to misuse but does not terminate the easement. Option C is incorrect because foreclosure typically does not terminate existing easements. Termination of an easement may occur through agreement, abandonment, or legal action. Question 18. Which of the following best describes the term title insurance? A. Insurance that protects the lender in case the borrower defaults on a loan. B. A policy that ensures the property is free from any tax obligations. C. Insurance that protects against financial loss due to title defects or encumbrances. D. A warranty provided by the seller guaranteeing the property's title is valid. Answer C. Explanation. Title insurance protects the buyer or lender from financial loss due to defects, encumbrances, or disputes over the title. Option A refers to mortgage insurance, and Option B incorrectly states that title insurance covers taxes, which it does not. Option D refers to a seller's warranty, which is different from title insurance. Title insurance covers issues such as undisclosed heirs, fraudulent deeds, or unrecorded liens and is essential for securing clear ownership. Question 19. What is the purpose of a special warranty deed? A. To guarantee that the property is free of all encumbrances and title defects, regardless of when they occurred. B. To guarantee that the property is free of encumbrances and defects only during the seller's period of ownership. C. To convey property with no warranties or guarantees regarding title. D. To provide a temporary transfer of property rights for a limited time. Answer B. Explanation. A special warranty deed guarantees that the title is free from defects and encumbrances only during the seller's period of ownership, unlike a general warranty deed, which covers all prior ownerships. Option A describes a general warranty deed, and Option C describes a quitclaim deed. Option D is incorrect as it does not describe a deed. Special warranty deeds are often used in commercial transactions, providing some protection but limiting the seller's liability to their period of ownership. Question 20. Which of the following is typically not included in a real estate closing statement? A. The sales price of the property. B. The buyer's loan amount and interest rate. C. The annual property taxes owed for the upcoming year. D. The seller's outstanding mortgage payoff amount. Answer C. Explanation. The annual property taxes for the upcoming year are not typically included in the closing statement. Instead, prorated taxes for the current year are included. Option A is incorrect because the sales price is always included. Option B is incorrect because the buyer's loan terms are listed. Option D is incorrect because the seller's outstanding mortgage payoff is also included. The closing statement, also known as a settlement statement, details the financial transactions between the buyer and seller, including prorated taxes, loan information, and closing costs. Question 21. Which of the following legal concepts allows a person to acquire title to property without compensation if they possess the property openly, notoriously, and without permission for a certain statutory period? A. Easement by necessity. B. Adverse possession. C. Fee simple determinable. D. Deed of trust. Answer B. Explanation. Adverse possession allows a person to gain legal title to property if they possess it openly, continuously, notoriously, and without permission for a statutory period. Option A is incorrect because easement by necessity provides access, not ownership. Option C refers to a type of conditional ownership, and D involves a loan security instrument. Adverse possession is sometimes referred to as squatter's rights, though specific legal criteria must be met, including the statutory time frame. Question 22. Which of the following accurately describes a life estate? A. The interest in property ends when the life tenant sells the property. B. The property automatically reverts to the original owner or a remainderman upon the life tenant's death. C. The life tenant has the right to use the property for a fixed term, regardless of their lifetime. D. The life tenant can transfer the property to their heirs upon their death. Answer B. Explanation. A life estate grants a person the right to use and occupy property for the duration of their lifetime. Upon the life tenant's death, the property reverts to the original owner or a remainderman. Option A is incorrect because the life tenant cannot sell or transfer ownership of the estate beyond their lifetime. Option C refers to a lease, not a life estate, and D is incorrect as the property does not pass to the life tenant's heirs. Life estates are often used in estate planning to ensure someone can live in a home for life, but the property eventually passes to someone else. Question 23. Which type of real estate ownership allows each owner to hold an undivided interest in the property with no right of survivorship, and each owner's share can be sold or transferred to heirs? A. Joint tenancy. B. Tenancy by the entirety. C. Tenancy in common. D. Life estate. Answer C. Explanation. Tenancy in common allows owners to hold an undivided interest in property with no right of survivorship. Each owner's share can be sold or passed to heirs. Option A is incorrect because joint tenancy includes the right of survivorship. Option B is specific to married couples with survivorship rights, and D is incorrect as it refers to a different form of ownership. This form of ownership is common when multiple parties invest in real estate together, allowing flexibility in transferring shares. Question 24. Scenario. David is selling his home but has agreed to remain living in the property for another year under a separate agreement with the buyer. Which legal agreement is most likely being used in this case? A. Lease option agreement. B. Sale leaseback agreement. C. Land contract. D. Deed in lieu of foreclosure. Answer B. Explanation. A sale leaseback agreement occurs when the property is sold but the seller agrees to lease the property from the new owner. Option A is incorrect because a lease option allows the tenant the option to buy. Option C is incorrect as it refers to installment payments for ownership. Option D is incorrect as it refers to foreclosure resolution. Sale-leaseback agreements are common in commercial real estate and provide the seller with liquidity while continuing to occupy the property. Question 25. Which of the following is not a valid requirement for a real estate contract to be enforceable? A. Offer and acceptance. B. Mutual consideration. C. A written agreement. D. Recording with the county. Answer D. Explanation. Recording with the county is not a requirement for a real estate contract to be enforceable. However, it is important for public notice and protection against third-party claims. Options A, B, and C are essential components of a valid and enforceable real estate contract. Contract must have offer and acceptance, consideration, and be in writing under the statute of frauds for real estate transactions to be legally binding. Question 26. What is the primary purpose of a deed of trust in a real estate transaction? A. It serves as the legal document to transfer ownership from the seller to the buyer. B. It acts as security for the lender, placing the property in trust until the loan is repaid. C. It ensures that property taxes and insurance are paid on time by the new owner. D. It outlines the conditions under which the buyer can take possession of the property. Answer B. Explanation. A deed of trust is used in real estate transactions as security for the lender where the property is held in trust until the loan is repaid. Option A is incorrect because a warranty deed or quitclaim deed typically transfers ownership. Option C refers to an escrow account, and option D does not describe a deed of trust. Deeds of trust are commonly used in states that practice non-judicial foreclosure processes. Question 27. Which of the following types of property ownership allows each spouse an equal and undivided interest in the property with the right of survivorship and prevents either spouse from selling their interest without the other's consent? A. Tenancy in common. B. Joint tenancy. C. Tenancy by the entirety. D. Life estate. Answer C. Explanation. Tenancy by the entirety is a form of property ownership available to married couples, providing equal, undivided interest and right of survivorship, and neither spouse can sell their interest without the other's consent. Option A allows for divisible interest, and option B allows the sale of an interest without the consent of the other tenant. Option D describes a life estate which does not involve co-ownership by spouses. This type of ownership is primarily used in estate planning to protect marital assets. Question 20. What is the effect of a lis pendens notice on a property? A. It allows the lender to place a lien on the property for unpaid taxes. B. It informs potential buyers that the property is subject to pending litigation. C. It clears all outstanding claims and liens on the property's title. D. It automatically transfers ownership of the property to the government. Answer B. Explanation. A lis pendens is a notice filed in the public record that informs potential buyers that the property is subject to pending litigation which could affect ownership or title. Option A refers to a lien, and C is incorrect as a lis pendens does not clear title issues. Option D is incorrect because it does not transfer ownership to the government. A lis pendens can freeze property transactions while the legal dispute is being resolved. Question 29. Which of the following types of zoning is intended to accommodate higher density residential development near commercial areas? A. Industrial zoning. B. Agricultural zoning. C. Residential infill zoning. D. Rural zoning. Answer C. Explanation. Residential infill zoning encourages higher density development in areas near commercial centers or urban areas to promote growth and efficient land use. Option A refers to manufacturing or industrial activities. Option B refers to farming and rural uses, while option D refers to low-density development. Infill zoning helps maximize land use efficiency and is commonly seen in urban planning. Question 30. Which of the following is an advantage of owning property in a community with a homeowners association? A. The HOA guarantees a higher resale value for your home. B. The HOA controls all decisions regarding home renovations and improvements. C. The HOA enforces community rules, ensuring property values are maintained. D. The HOA provides free home insurance to all members. Answer C. Explanation. One advantage of living in a community with a homeowners association (HOA) is that the HOA enforces rules and regulations designed to maintain property values and aesthetics within the community. Option A is incorrect because an HOA does not guarantee resale value. Option B is partially correct, but stated too broadly as homeowners typically still have input. Option D is incorrect as HOAs do not provide home insurance. HOAs are common in planned communities and typically require fees for maintenance and amenities.